Good evening, traders. Today is Friday, December the 10th, 2010, and this is the weekly video. This week we finished up strong. S&P closed up to a 2-year high today, and the NASDAQ Composite closed the best since it's been in 3 years. That was led by Consumer Sentiment Survey, which was the best in 6 months. And we also brought in higher exports and lower imports, so that should provide a boost going into the fourth quarter GDP. The trade today was pretty simple. You just buy in the morning and you just let it ride out. So how I've been trading it, I showed you in a few videos before. As soon as the market hit that original low and then put in that higher low, right after that we purchased FAS and we just let it ride to the top. There are some interesting things that took place today, but I'll go over that after we take a look at the weekly performance sectors. Financials led the way, and in Sunday night's video I explained that financials needed to have short covering in order for this rally to continue. That's what happened. Now the top big 7 stocks and the NASDAQ, which I'm referring to, Apple did make another 52-week high this week, and actually an all-time high. But it wasn't any explosive moves in the big stocks. More of the moves, it seems like maybe they're reducing some of their positions in them and trying to do some sector rotation. That could be one of the reasons why financials did explode. Conglomerates finished second, finished up 2%, followed by industrial goods and healthcare. Healthcare really rallied today, and that's because CYH acquired THC, and they offered them $6, and that offered all healthcare stocks really to rally. CYH gapped down huge in pre-market, but throughout the day, I'll show you what it did at the end. It was really explosive. Dow Jones finished up about 1/4% this week. It was the laggard between the S&P, the NASDAQ, and the Russell. S&P finished up about 1.25%. The NASDAQ finished up 1.75%, and the Russell, which was the strongest, finished up about 2.75%. Gold plummeted this week, finishing down about 2%. Crude oil finished down 1.8%, closing at 87.82. And the VIX actually was down pretty big today, and that this week closed down 7.6%. I'm looking at a 2-year S&P 500 cash index chart right here, and you see this trend line still intact. This 1219 level still holding, and we just continue to rally, but 1240 is some resistance. If the market continues to grind higher going into the end of the year, being that portfolio managers are window dressing so they can meet their end of year quotas, I believe the next level that will be tested will be the 1256 level, which we put in March of 2008. And then after that, of course, we're going to go for the 13th psychological level. That's right before we had the huge collapse in the real estate markets. I'm looking at a 5-day chart right here of the S&P. I just wanted to show you what I was talking about, how we were trading this market on my team. When the market sold off, we put in the low, which was right here. Right when we make that first higher low, that's when we start allocating capital into FAS. Had an amazing move here. Then on the 8th, we opened up, we sold off. Here's the low. Here's the higher low. We allocated our capital here, put our stop right there, finished off almost at highs of the day. Next day we do the same thing. Come down, put in our low, our higher low, finish off highs of the day. And it continued happening like that. So it was a pretty easy trade. Looking at the Dow Jones right here, and the next level we need to get past is this 11,450, which we put in back on Tuesday. The 1-hour chart is on the right, and then on the left we have the daily chart. We still have a buy indicator on the PPS. We're above all moving averages, and the 5-day moving average is turned up. So as long as we hold above 11,328, I think we're going to make a higher move. Like I explained earlier, S&P has short-term resistance in the 1240 level. But after we get past that, 1247 will be the next big handle that we approach. We still have an ascending 50-period moving average on the 1-hour time frame, and on the daily chart we have an ascending 5-day moving average, Not to mention we're above all the other moving averages, and we have a buy signal on the PPS. NASDAQ looking pretty compelling after breaking past the short-term resistance at the 26.25 level, and that's when we got that explosive move today. So the next level we're going to gun for, as long as we hold this 26.23, will be 26.50 in the NASDAQ. Now what we ideally want to see when we approach this is we want to break through it. So when we come up, if we consolidate a little, the main thing is that we break through it. Then we pull back, then we move up, and we break out of this fresh high. That's for the move up. For a move down, what would happen is we'd come up here, we'd sell off, we might retest it or put in a higher or lower high, consolidate, and then move back down, and then we'll start looking for some support levels. You already know this is going to be one, the previous highs we put in the previous 2 days, and then the 50 period moving average. And of course the Russell looking very, very good. 5-day moving average still ascending, PPS still a buy signal. We're above all the moving averages, and we just broke out above Wednesday's high. So everything looks good now. What usually happens on Monday, the reason why the market closed at high today, is a lot of investors were positioning themselves for a Monday move. So you could see a gap up if the futures hold their gains that they put together this week. When they open up on Sunday, they could just firm in and we could have a decent morning trade. So the main level we're looking for in the Russell is 791 for next week. And in my watch list video, which I'm going to put out either later tonight or tomorrow, I'm going to list a few names that are very, very exciting. They really look like their charts are going to break out. One of them being Pulte Homes. I'm going to run over the ETF charts real quick. The XHB Home Builders ETF looks pretty bullish. Over 1721, we're going to look for a move up to 1761. Telecom stocks made a new high today. We have some short-term resistance around 2307, but it looks pretty good, and we finished up 1 3/4% this week. Technology still looks bullish, made another higher high. 2528 is going to be that resistance from November the 9th that we approach next. Consumer staples, our next level is 2927. We actually finished unchanged today, but if we could get past this 2927, I see 2976 coming very soon, and the support we need to hold is 2899. The material sector had a minor sell-off Tuesday and Wednesday, but we met that support at 36.53, which we bounced right off, and we got to close above the 50 period average today on the 1 hour time frame. That alone is a bullish indicator. So we're going to look for a move back up to 37.88. So we're going to try to break this previous high that we put in on Tuesday and presume up to that 37.88 level. Next, we're looking at healthcare, and this is the daily chart. It looks pretty good. We had this consolidation level right here under this trend line, which made everybody think that the bears were going to take control, since we failed to take it above right there 2 days ago. I believe that was on Tuesday. And then we sold down, and right when we got below the 20-day moving average, that's when everyone thought that we were going to easily be testing the 200-day moving average. But as you can see, the bulls took control. The next day, which was yesterday, Thursday, we closed at a higher high, and then today we broke out of this downtrend, which caused the trend to be bullish now. So what I'm going to look for on the 1 hour time frame, we have to hold above 31.28. If we could do that, I want to see us consolidate here, pull back, and then go up. So as long as we hold this level, guys, I'm still bullish. 31.28 on the material sector, or on the healthcare sector. And CYH acquiring THC didn't hurt any. Transports made another higher high, finishing at 92.29 today with a high of 92.81. And that brought us above the high that we put in on the 7th. So the next level is 94.01 resistance. And what we'd like to see is us hold 91.79, maybe come down, bounce off this and go up. That would be extra bullish because the 50 will just keep following this right around to turn up. Retailers have been consolidating, and a couple of the big names that have been progressing lately sold off today. So we're going to see what happens here. If we get a close below 104.75, I'm going to see if this gap could be filled around this 104 area. XLY, consumer discretionary sector, needs to hold 37.52 as support, which will keep the rising 50 period average intact, and then try to get past this high we put in on Wednesday at 37.88, and we finished up about almost 0.5% today. The energy sector overall finished flat this week after gapping up and putting in a high of 67 on Wednesday. We sold down. People thought that they were going to bring it to 64.71, but that never happened. They moved it back up to 65.90. So if we actually rally back up here and maybe get some selling on the supply of 66.71, because that shows, because we couldn't hold past this high on Wednesday and they sold it below it, it shows there's some demand in this area. So we're going to see if we could either retest it, get over it, and break the 67, or sell off when we get to it. And if that happens, 64.71 will be our S1. The utility sector was the worst performing sector of the week, which finished down 0.5% on the week. But right now, we are in a short-term downtrend. We got to close at 31.12 today, which is right around the 20-day moving average. We had lighter than expected volume, but the volume right here was on decreasing. The sell-off was on decreasing volume right here. And then we had some volume coming in today, but it wasn't extravagant. But right here, I just wanted to show you we do have an uptrend. So the uptrend's still intact, and if we get over 31.12 and hold, we're going to look for a move higher to break out of this 31.40 level. I'm now looking at the IYR, the real estate ETF, which finished down over 1% this week. Right here's a 3-minute chart, and what I wanted to show you is this declining trend line, and then you have an ascending trend line that was broken, and we held under it even today. If we can't hold above this 55 resistance level, which is also around the 50-day moving average, then I think some selling could continue down to this long-term trend line. And I'm going to switch to a 1-year time frame for that. As you can see right here, which started in July, it's continued down. And if we break through that, things could get pretty nasty with IYR. Alright guys, you enjoy your weekend, and I'll get a video out tomorrow on all the trades for next week.